Dear students, welcome to the course on marketing of financial services. And in this video, we would be understanding a concept called as credit rating. Before I move into the details, let us try to understand the outline of this video. This video is divided into four parts, wherein we are going to start with understanding what is credit rating, various definitions, types of credit ratings, what is the importance of credit rating and to whom, and the fourth point, what are the different credit rating agencies operational in India. With the first definition to understand, which I have taken directly a dictionary meaning of credit rating, it is an estimate of the ability of a person or organization to fulfill their financial commitments based on previous dealing. Similarly, the definition from Wikipedia says credit rating is an evaluation of credit risk of a prospective debtor, predicting their ability to pay back the debt and implicit forecast of the likelihood of the debtor defaulting. Means, if you look at these two basic definitions, it is trying to understand as point number one, it helps to understand ability to fulfill the financial commitments can be checked depending upon the previous dealing of the individual or of the organization. Similarly, it also tries to make us understand that does the debtor has an ability to pay back the debt it is trying to take. It is nothing but a forecasting of what are the chances that the debtor would be a defaulter will help us to get analyzed through this simple understanding of the concept called as credit rating. Similarly, the Economic Times also has defined credit rating as an analysis of credit risk associated with financial instrument or a financial entity. It is a rating given to particularly entity based on credentials and the extent to which financial statements of the entity are sound in terms of borrowing and lending that has been done in the past. From this, it is very clear that it is in the form of detailed report which is based on the financial history of borrowing or lending, which gives the credit worthiness of the organization or the person obtained from the statement of its assets and liability. Here, the aim is to determine their ability to meet the debt obligations. Moreover, credit rating helps in assessment of solvency of a particular organization or individual. The ratings based on detailed analysis are published by various credit rating agencies like Standard and Poor's, Moody Investor Services, and ICRA, which are few to be named. Similarly, we try to understand one more definition that credit rating is means an opinion regarding securities expressed in the form of standard symbols or in other any other standardized manner assigned by a credit rating agency and is used by the issuer of such securities to comply with the requirements specified by this regulation. This is one of the definition which is given by SEBI for us to understand. Basically, if you look at it, talks about giving a symbol. That is what we need to put across. Similarly, from these definitions, we analyze how important is it to analyze credit worthiness of an individual before you give him a loan, which is applicable both for an individual as well as for the organization. Moving a step forward, let us try to understand that what are the different types of credit rating. Each credit agency generally uses its own terminology to determine the credit rating. That said, the notions are strictly similar among the three credit agencies. Rating are bracketed into two groups. One, investment grade, and the second type, which is written on the slide, is speculative grade. Now, what is the difference between the two? If you take investment grade, it means that the investment is considered solid by the rating agency and the issuer is likely to honor the terms of repayment. Such investments are typically less complicatively priced in comparison to speculative grade investments. That means speculative grade investments are high risk and therefore offer high interest rates to reflect the quality of investment. That is what we need to put across in a simple thing to understand. Let us now move forward after understanding the definition and what are the types of credit rating. Let us look into the next aspect, which is called as what is the importance of credit rating. Dear students, if you talk about an ideal world, everyone would have enough money to take care of their needs. However, facing the reality, most of us have little option but to make credit to meet our life goals, especially the ones involving a huge amount. For example, home, car. To making borrowing money from bank easier, it is important to have a good credit history which is determined not only the credit score but also the credit rating. That is, credit rating is an assessment of the borrower, be it an individual or the company, that determines whether the borrower will be able to pay the loan back on time as per the loan agreement. Needless to say here, a good credit rating depicts a good history of paying loans on time in the past. This credit rating influences the bank's decision of approving your loan application at a considerate rate of interest. It helps investors to recognize the risk involved in lending the money and gives a fair assessment towards the borrower's credit rating. Hence, credit rating is important both to the lenders as well as to the borrowers. For the money lenders, it is benefited in two ways. As a better investment decision, no bank or money lender companies would like to give money to a risky customer. With credit rating, they get an idea about the credit worthiness of an individual or company who is borrowing the money and the risk factor attached with them. By evaluating this, they can make a better investment decision. High credit rating means an assurance about the safety of money and that will be paid back with interest on time. Thus, money lender it offers an assured safety with respect to credit rating. Similarly, for borrowers, also credit rating plays a very important role. It plays two important roles. One is in case of loan approval. It makes loan approval very easy for individuals with high credit rating. One will be seen as low or no risk customer. And in this case, banks will approve your loan easily. Second important part for the borrowers per se towards credit rating is considerate rate of interest. One must be aware of the fact every bank offers loan at a particular range of interest rate. One of the major factors that determine the rate of interest on the loan one takes is his credit history. Higher the credit rating, lower would be the rate of interest. Hence, these are the two areas which are going to get benefited for a borrower in terms of credit rating. We move to the last aspect of the credit rating and try to understand what are or which are the various credit rating agencies in India. Internationally, if you look at three big credit agencies which we have heard many times on CNBC or Business Channel is Standard and Poor's, which is S&P, Moody's and Fitch Rating. These are the companies which are known for their rating internationally. Credit rating agency are the agencies that evaluates the credit worthiness of an individual, business or company who wish to borrow money or apply for the credit card in the bank. If you look at, let us try to understand before we move into the various agencies, what is the role of credit rating agency? The credit rating agencies rate the credit worthiness of issuers of debt obligations of debt instruments and in some cases of the services of the underlying debt. The debt instrument rated by CRAs includes government bonds, corporate bonds, commercial deposits, municipal bonds, preferred stocks, collateralized securities such as mortgage-backed securities and collateralized debt obligations. In simple, it is nothing but a credit rating is an evaluation of the credit risk of the prospective predictor. Also, predicting their ability to pay back the debt along with this makes a forecast for the chances of debtor defaulting. The credit rating represents an evaluation of a credit rating agency of the qualitative and quantitative information for the prospective debtor, including information provided by the prospective debtor and the other non-public information which are generally obtained by the credit rating agency's analyst. Credit risk is the risk of default on debt that may arise from a borrower failing to make the required payment. These are various agencies which are operational in India. First is CRISIL, which is Credit Rating Information Services of India Limited. Second is ICRA, Investment Information and Credit Rating Agencies. Third is CARE, Credit Analysis and Research Limited. SMIRRE, Small Medium Enterprise Rating Agencies of India. Let us try to understand in detail about certain agencies which are available or in context to India. The first which we are going to analyze is CRISIL. It is a Credit Rating Information Services of India Limited. It is the first credit rating agency of the country which was established in the year 1987. India's first and the largest agency, operated in the year 1988, is promoted by ICICI Limited, UTI and other financial institutions. CRISIL 500 Equity Index in 1995 was developed in partnership with the National Stock Exchange. It has been grown to a global analytical company that gives rating to the companies, researches the markets and provides risk and policy advisory services to the clients. The world's biggest credit rating agency, Standard and Poor, has a majority stake in CRISIL. CRISIL calculates the credit worthiness of the company based on its strength, market share, market reputation, and board. It also rates companies, banks, and organizations, helping investors make a better decision before investing in companies' bond. It offers 8 types of credit rating, which are as follows. Triple A, double A, and single A are termed as good credit rating. Triple B, double B is average credit rating. B, C, D is lower credit rating. Let us move to the next type of agency. It is ICRA, which is Investment Information and Credit Rating Agency. This was formed in the year 1991 and is headquartered in Mumbai. ICRA offers comprehensive ratings to corporates via its transparent rating system. Its rating system includes symbols which vary with financial instruments. It is a second rating agency in India, a joint venture of Moody's and leading financial investment institution, commercial bank and several companies. It has a role in corporate debt rating too, financial sector rating, issuer rating, bank loan credit rating, public finance rating, corporate governance rating, and many other involved. It is also involved in mutual fund rating. These are various types of credit rating which are generally offered by ICRA, which has been mentioned for you to look into with respect to the points. Then we move to the next type of credit agency, that is what we'll try to look into is CARE, which is a credit analysis and research limited. This offers a range of credit rating services in areas like debt, bank loan, corporate governance, recovery, financial sector and more. Its rating scale includes two categories of long-term debt instrument and short-term debt rating. CARE was incorporated in the year 1993 and is the second largest full service rating company in India in terms of rating income. CARE rating is promoted by major banks and financial institutions in India. The company has 13 offices in India and one office in Republic of Maldives. It offers wide range of rating and grading services across the range of instrument and has over 23 years of experience in rating the debt instruments and related obligation covering almost all the sectors. Similarly, we move to the other credit agency of our concern, that is SMIRRE. SMIRRE is in short Small Medium Enterprise Rating Agency of India. That is again one of the agency which is widely used in case of credit rating in this case. And if you look at the details, it talks about it is exclusive for small, micro, small and medium micro, small, medium enterprise in India, and it is a joint venture of SIDBI, Dun and Bradstreet India and leading banks in India. Has two divisions. One is SME rating and bond rating. Was established in the year 2011 and is a hub of financial professionals. It offers credit rating in the following alphabets. Triple A, double A is low credit risk. Triple double B is moderate credit risk. B and C high credit risk, and D is termed as defaulted. Similarly, we try to understand one more credit agency of our interest, which is called as the ONICRA, which is Onida Individual Credit Rating Agency of India. It was established in the year 1993 and it offers credit assessment and credit scoring services to both individuals as well as businesses. Private rating agency set up by Onida Finance provides employee background assessment and individual decision analytics to enterprise customers. It plays a very important role in investigation data and arranges for possible rating solution for small and medium enterprises as well as individuals. Agency finds solutions and helps organization take informed decisions about lending funds to individuals, MSME, and other organizations. It also offers risk assessment reports to individual as well as SME. Its rating are based on two important factors. One is financial strength and the second one is performance capability. The few other agencies of our interest would be, the next is India Rating and Research, which is INDRA. It covers corporate issuers, finds financial institution, banks, insurance company, urban local bodies, structured finance and project finance. It is recognized by SEBI, NHB and RBI. This is one of the company which is completely owned by the International Fish Group. The next part of our concern is the Equifax Credit Information Services Private Limited, which is ECS. Equifax, an international company, operates in India through India, is registered as Equifax Credit Information Services Private Limited, which is ECIS, and Equifax Analyticals Private Limited. It is a joint venture between Equifax Inc. USA and 7 leading financial institutions. These leading financial institutions include State Bank of India, Bank of Baroda, Bank of India, Kotak Mahindra Prime Limited, Religare Fininvest Limited, Sundaram Finance and Union Bank of India. ECS Equifax India was granted its certificate of registration on March 26, 2010 by Reserve Bank of India to establish a credit information company and provide various credit information services in accordance to the Credit Information Companies Regulation Act 2005. 2005, that is what, with Credit Information Companies Rule 2006, that is what we need to. Over the last 7 years, this credit bureau has grown to thousands of members including banks, NBFC, microfinance company and insurers. That members provide data on demographic and repayment information on millions of Indian customers. With this, we conclude with the last slide, understanding about what is the rating, that is credit rating, what are the types of credit rating, how it is important to both borrowers and lenders, and we try to overlook and have a brief idea about what are the different types or which are the different types of credit rating agencies operational in India. With this, I conclude my video session on credit rating.